Hi there, David and I hope you and your families are all safe and sound. The weather's starting to get nice and it's that time of year again to start fiddling through things and collecting all your tax slips. David and I thought we'd give you some tax tips for 2020.
The first thing to review is the deadlines to file your income tax return. For employed individuals, the deadline to file your 2020 tax return is April 30th, 2021. If you or your spouse or common law partner are self-employed, the deadline to file your taxes is June 15th, 2021. Please note that there are no extensions for 2020 tax returns like there was for 2019 due to the pandemic. Here's a tip. Be aware of late filing penalties. If you have a balance owing, there are significant penalties for filing late. There's an initial 5% penalty on the balance plus 1% extra per month late that you file. For example, if you owe $5,000 in taxes and send in your tax return 12 months late, your tax bill increases to $5,000 times 5% equals $250, plus $5,000 times 1% times 12 months equals $600. So your late filing penalty is $850, increasing your overall tax bill to $5,850. Even if you aren't able to pay CRA what you owe them in taxes, it still makes sense to file your taxes before the April 30th deadline. Doing this means that you avoid the late filing penalty and will only be on the hook for interest payments. Many Canadians received government benefits like CERB that are taxable in 2020. This could mean that many taxpayers who ordinarily don't have a balance owing may have one owing for 2020, yet another reason to make sure you file in time. If you're still filing a paper return and mailing it to the CRA, you should consider filing your return online with a NetFile certified program like UFile or TurboTax. This will help make sure you get your return processed in time before the deadline and will help you get your refund much faster if you are owed one. Tax software can also help ensure you are taking full advantage of all available tax credits and income splitting with a spouse if applicable.
As a result of the pandemic, many people were forced to work out of their homes for much of 2020. If this applied to you, you may be able to claim expenses related to work from home. Things are a little simpler for 2020 as employees can choose between the traditional detailed method and a new flat rate method which is less onerous and has a cap of $400. In the case where your job has always required you to work from home regardless of the pandemic, you may be able to claim more than the $400 flat rate of employment expenses. To do so, your employer must provide you with a signed T2200 Declaration of Condition of Employment form. You will also be required to fill the T777 Statement of Employment Expenses form and file it with your tax return. You also must keep detailed records of your expenses. This is a traditional detailed method. For employees that do not typically work from home or did so for a portion of the year, the flat rate method, which is new for 2020, is a nice option. You could use the flat rate method if you work from home for more than 50% of the time in 4 consecutive week periods. You can claim $2 for each day that you work from home during that period, plus any other days you worked at home in 2020 due to COVID-19, up to a maximum of $400 for the year. You will still have to file a T777 Statement of Employment Expenses form under the simplified flat rate method. To learn more about which expenses are eligible for you to claim, as well as some more information and examples to help you decide which method is most appropriate for you to use, please check out the link we provided on this topic. You can find the link in the body of the email that you opened this video from.
By now, many of you may already be familiar with the various federal and provincial benefit programs that have been introduced because of the pandemic in 2020. We think it's worthwhile to do another review as there are still many folks that are not aware or have not yet applied for certain benefits that they are eligible for.
The Canada Recovery Benefit. This benefit was formerly known as Canada Emergency Response Benefit, CERB. The CERB program has since been integrated with Employment Insurance and renamed Canada Recovery Benefit. You may qualify to receive $500 per week if your work was impacted by COVID-19 and you did not qualify for EI. This benefit will end on September 25th, 2021.
The Canada Recovery Sickness Benefit is a paid sick leave that is available for self-employed workers who could not work because of COVID-related sickness. You may qualify to receive $500 per week for up to 2 weeks. This benefit will end on September 25th, 2021. A similar benefit is the Canada Recovery Caregiving Benefit. The Canada Recovery Caregiving Benefit gives income support to employed and self-employed individuals who are unable to work because they must care for their child under 12 years old or a family member who needs supervised care. You may qualify to receive $500 per week, the maximum potential benefits of 26 weeks. This benefit will end on September 25th, 2021 as well.
The next benefit is something that's really important, and David and I have noticed that a lot of people still have not taken advantage of this, so please pay attention. This is a BC Recovery Benefit. Only residents of British Columbia may qualify for this benefit, a one-time tax-free payment. Benefit eligibility is based on your net income from 2019 tax return, worth $1,000 for eligible families and single parents with a net income of up to $125,000, and a reduced benefit amount for eligible families and single parents with a net income of up to $175,000 in the year 2019. $500 for eligible individuals with net income of up to $62,500 and a reduced benefit amount for eligible individuals with a net income of up to $87,500 in 2019. Deadline to apply for this benefit is June 30th, 2021.
Canada Emergency Wage Subsidy. This benefit is available to businesses that have experienced a 30% drop in revenue month over month compared to 2019. Businesses may qualify to receive a subsidy of up to 65% for wages that you paid to employees between March 15, 2020 to June 2021. The application deadline for this subsidy is January 31st, 2021, or 180 days after the end of the claim period, whichever comes later. This program has been extended to June 30th, 2021. This is a somewhat complex program compared to the others, and you'll likely need help from your accountant to confirm your eligibility and with application for funds.
The next benefit is for businesses. It's the Canadian Emergency Business Account. You may qualify to receive an interest-free loan of up to $60,000, of which $20,000 would be forgiven if the balance of the loan is repaid by December 31st, 2022. Initially launched, the loan was capped at $40,000 and $10,000 forgiveness. The government has since expanded the loan by another $20,000. If you originally got the $40,000 loan, you should go back to your accountant and see whether or not the $20,000 funding would apply to you. The application deadline for this loan is March 31st, 2021, so it's coming up very quickly if you have not yet applied. Sole proprietors, partnerships, and incorporated businesses may all qualify. The eligibility bar is low. A business is eligible so long as it paid at least $20,000 in employment wages in the year 2019 and no more than $1.5 million. If a business paid out less than $20,000 in salary in 2019, they could still qualify under a non-deferral expense stream.
Here's some other general tips that we think are useful. Number one is do not pay back your homebuyer's RSP loan faster than required. When reviewing tax returns, I inevitably see this mistake being made regularly by folks. Unless your circumstances are particularly unique, it doesn't make sense to pay this back any faster than required because you are not taking advantage of the interest-free loan and the current tax savings. If you or your spouse has eligible pension income, make sure you are optimally splitting your pension incomes for the best overall tax savings as a couple. Sometimes because a lower income spouse is in line for a tax refund, Couples are reluctant to split more pension income to the lower income spouse because it will result in a balance owing. But if it ends up saving you taxes overall as a couple, you should be doing it. If you're using the tax software, the software will help you determine the optimal amount to split. Yet another reason to embrace technology and quit filing paper returns. Number 3 is to consider hiring a professional. As with most things in life, if you spend lots of time and frustration doing your own taxes, you might want to consider hiring a professional to do it for you. You may still have to do a lot of the legwork like tracking expenses and finding your tax slips. But if you hire a pro, chances are they can help you identify some ways to save on taxes that you may not be aware of. The Canadian tax system seems to get more and more complicated each year, and especially with all the COVID-19 related tax benefits, it could be worth your while to work with a professional, especially if you're a business owner. Thanks for taking the time to check out today's video. If you have any questions regarding your 2020 tax filing or any of the unique government benefits that we covered in today's video, please don't hesitate to give Harry or myself a call.
Stay safe.